Hi, it's David here with Future Trading. Thank you for my subscribers. Thank you for the new subscriber. I appreciate you stopping by now. And thank you for the like as well as the follow over here on TikTok. Thank you so much. Really appreciate that. Now, I made a couple of videos today. They're kind of too long to be on TikTok. So what I did is I tried to put the links here, and I'll include it in this video as well for you guys to be able to benefit. You can come over here and watch these videos. They're just too long. TikTok would not allow me to upload it. So live trades, a lot of live trades in here trying to show you how to trade momentum. No indicators at all. Just, well, the price action one that you're already aware of that I made, but just trading momentum, just momentum getting in and getting out really, really fast. So that way you'll know how to take trades without blowing out your account. And of course, try to keep the leverage down using just one contract, just going in and out of the market and pull down what I needed to, close to what I needed to anyway within that time frame. So, and of course, the other video here, I did the stocks and the forex, reading it in real time. Okay, went through several of them, so that way you can see how to know. So you pull up the chart at a glance, know kind of which way it should go. All right, so wanted to make some new videos for you guys, so you can look at it. All right, and you can find the universal one that I made today here and here, and then of course the information about the live trade with the momentum. You can find it here in this. Information there you can find in that playlist, live trades. Now, the video I gave you this morning about reversals, we're going to look at that hourly, that daily, and then I'm going to go ahead and jump into that 1 minute and show you what a real reversal is supposed to look like. All right, so that's something I want to cover real quick here. But again, if you want to see this information, I'm gonna make sure I have the links for you in the message board there. I had the links available for you. Now, this is the hourly, okay? And I did it from the 25th. So right in this area here, you'll see that range and that compression there is from the 25th. I'm gonna show you the 1 minute chart, and we're gonna comb through what I'm about to do in 10 minutes. 10 minutes, we're gonna do it fast. Here's the range here on this red bar here, on this red bar coming down at 11 o'clock. Look at the time down here. At 11 o'clock, when that red bar was coming down, I told you that this price level was important, very important. All right, so and I knew this price level was important long before they got there. Long before this turn even happened. All right. Important. All right. So they gave you the trend, gave you the trend distance, and of course the trend came in after this red bar. All right. So then the trend came in, they gave you six back down, didn't want to get through that bottom, but they closed beneath that mid. And we're going to talk about that. They closed beneath that mid, but only 6 bars. And so they gave you the trend back up. And of course, there's a price level up here, just like this one. I knew that was important that they could turn around. But again, here's the ranges off to the left. You could have used the ranges to go ahead and, see if you can get it to turn back around for you. When it came back down here in yesterday's video, when I gave you that information about not buying that bottom, uh, it was because I thought that they would do it again. So I told you it was this video here. I told you yesterday don't buy the bottom because I thought that they were close beneath. And that's why I came back this morning and told you, yeah, they got that up, but they need to get above that 725 and start closing, and definitely on the daily. So let's take a look at that 1 minute. And again, let's make sure that we pay attention to this price. This is the mid of this turn here, that 555.45.75. That's the mid of the hourly. We want to make sure we pay attention to 11 o'clock, and this is where we're going to start right there at that range. All right, so now let's take a look at that. Let's take a look at this 1 minute. All right, so let's go back to where all of that is happening at. All right, so let's go back there. All right, so let's start with the 25th. All right, so here's the 25th. All right, now there's the gray range. And that's why I told you using the ranges will give you an advantage, because you'll see it build itself. You'll see it build itself, and they'll move away from it. All right, so you could have caught that big run from the range while they was playing compression, on that hourly chart, trying to trick you. All right, so when they was playing this game right here, you would have known, hey, let me go ahead and grab this, because usually the big move come from this area. All right, so there's the move up, all within 10 minutes. Want to hurry up and get you through this. And of course, here's that range here. Don't want to comb through all the ranges, just want to show you some information. So here we go, 11 o'clock right here. Now look down at the bottom. While that bar was coming down on that hourly, not finishing, I told you that that price level above was important. All right, so then they turned around, hit the range. They hit our range. All right. And if you're looking at the color bars, the text don't know what it is. Anything that's a red bar with the level is a hard stop. The NC is just don't close back above or beneath if it's a green bar, and you can combine that information with the range. So they hit the middle of the range. That's when they was coming down on that red bar. That's them hitting that range. All right. So They managed to turn back around. That's why I told you, you really need to grab that range. I've been stressing that range. That's the edge, all right, for the public. There's information again that I know that's far more robust than them ranges. All right, now here we go. That's that price level. First contact dropped away, came back with the algo back and forth spike, okay, and looking where the algo hit, right dead into that price level, fed right into it. All right, and then we fell back down. They fed into this mid before they ran back up on that one bar. Okay, hit that mid, ran back up. Now here's the problem with the reversals, and this is why I told you closing beneath the mid is a problem. They close beneath the mid here. Now this line here is projected forward to where you'll see in a second. So here's a mid here. They didn't want to break that bottom right away, and I gave you how that plays out too. So they tagged it, okay, and then they went forward. I totally get it. Went to the upside. Absolutely. Now when coming back, just take a look here. On the way back down, they took out that big old spike bar. Okay, so that's that green line, that thick green line here. They took out that big spike bar because they closed beneath that mid. Now again, that's just one requirement. There's several requirements. That's just one. All right. So now here, this is the mid. This is the mid of the hourly, that 15, 545.75. This is that mid. All right. So they came back and they closed beneath it. That's what made me think when they came back again and came back down, and I thought they was gonna close beneath it. And I did not want y'all to get, your stop brand. You saw that big spike and they came back and took that out. All right. So now this is what a real reversal look like. I want you to pay attention to this. Please draw your attention to this. This is what a real reversal will look like just off of those two components. All right. So if you are someone trying to counter trend and want to catch reversals, this is what you want. Mid of the bar, open of the second one higher, grab both of those. And now let me show you. All right. Fed right into it, right directly into that zone, and then took off to the upside. All right, so now that's that 725. This is that price again. That price. They're going back into it. Now that's at the top of that range. Okay. Now keep in mind this is days. This is the 27th. Now this 2 days later. Look at where that range is landing. All right, that's the overnight range. Of course, that morning's range was above it. Now the red line here, do this as fast as I can within 10 minutes, is that 883. That's the open of this second bar here. And of course, the mid is there. And then, of course, the black line, the green line that you will see with all these tests on here, that's the mid of the daily and as well as the open of that second bar. So that red line you're currently looking at is the daily. That's the daily bar here. So now, here we come with the drop back down into the range. Now here come the mid and the open of the daily. All right, so that's all that, and that's what I thought that they would close beneath there, but they managed to get back up on that hourly and didn't want to close beneath that price down there. So that's the overnight. We're above it, and so now let's take a look at today. So this is today's activity here. 9:30 came in right about here. There's that 725. There's that price right there, and you can tell that range was right there to catch that decline. They hit the top of that range, and then we came back up here to this price level here, and that's that daily. That's the daily now. That's that daily 883, and that's why I say you're not out the woods yet. You will want to make sure that they can take that out as well, and so that's what we did. Now in the video this afternoon when I did the live trades here, I gave them a price that was not that price. I gave them a price that was beneath that price that they needed to close above, and they did not make it. All right. So if you would like, you can go ahead and take a look at that information. And I wish you all the best with your trading. Take care.